Hi everyone, welcome to WIC channel. My name is Rifad. So today, I know it's about a time I kind of did it like about stocks and my watch list for the month of February. So I kind of drew up three stocks that I'm kind of watching for the month of February and see where they kind of land that I might buy. I might not buy them because I kind of have a big list of watch lists that I want to own of shares. But like this is out of all that I have in my watch list. I kind of picked three that I kind of spotting because I want to build position in them or bigger position in them. So kind of watching them where they kind of will land. So I kind of picked up three stocks which I'm personally watching that I might buy or might not buy, but I find them very interesting stocks and want to see where they might go because a lot of things are gonna happen this month. I can just go ahead and before I go in the details of the stocks, I just want to give a heads up to you guys that it's my personal opinion, my research, and because I don't have enough time to do the whole evaluation of the company, I might go briefly. So I would just give you guys an idea of what companies I have and viewing. I want you guys to do your own due diligence. Even like drop me a comment saying, hey, I think it's not a good idea because so and so and so. Just let me know. But it's my own personal opinion. I'm just gonna go ahead and like a brief overview, trying to recap those stocks. But please do your due diligence. Don't buy it because I say so, someone says so. Please always do your due diligence. So let's go into it. I will go to the supercomputer, and on the supercomputer I will. Hey, welcome guys. Thank you for joining me from the supercomputer. As you can see, I got my little friend. He just left. So as you guys can see, I kind of revealed my first choice. My first choice is Scotiabank. I've been watching them for a while. I find them very interesting, and evaluation is pretty good. So one of the reasons I like them is we can go with the PE ratio, which is very reasonable. It's like on 10. Forward trailing PE is like 9. And also their earnings is coming soon. I think it's coming around end of February, which is like February 26th, if I'm correct. And before the earnings, they kind of went up. So I'm kind of viewing as, I think people are starting to become kind of bullish before the earnings, which could be that they're expecting a lot for the earnings. And if the earnings come around like, like maybe we'll say kind of okay to kind of not exceptional, it could potentially drop because you can see, because for the past month it went up 8%. So it's kind of very interesting to see where they kind of land. And like I think they're just expecting a lot. So it's been going up continuously for the past month before the earnings, right? So we'll kind of do the thing here for the evaluation. And the reason I'm not really rushing to buy, even the P ratio is at 10, which is one of my main ratios that I always see, is when you kind of see, yes, it's lower than the TSX, but since 2009, when you kind of see the whole P ratio, they always been below the TSX most of the time. I think, yeah, if I'm correct, yeah, they never technically even been over the TSX, so they always been below. And when you compare the industry, they're kind of all in the same bucket. So I'm not really rushing to kind of buy in, even if it's low. We'll see. I'm just gonna wait for a pullback technically. So you guys can see, and so that's pretty much it. If I'm correct, if I have more stuff, yeah. So the outlook, I would say, for me is one of the things I like about Bank Scotia is that they're well diverse, right? They're invested in a lot of countries in Latin America, so they kind of the money comes in or flows in a lot from a lot of business branches, which is not only completely focused on Canada. So they're not really they're Canada, but they're not heavily invested. Yes, they all invest a lot everywhere, so they're kind of less dependent on what's happening in Canada. They're getting revenue streams from a lot because they're considered one of the global banks in Canada because they invested a lot. And for the past year, I think 2018 was one of an active year for Scotiabank because they've made a lot of purchasing, buying a lot of companies from investment firms and everything. So this year is kind of the year that people are expecting to kind of deliver on those acquisitions, right? To kind of go through. So we'll see what happens. It's kind of my watch list. I want to see if there's a pullback, a big pullback. They go back to maybe like in the 60s, below 70. Maybe I kind of be interested. For now, they've been continuously going up, so I'm just kind of waiting to see what can be the outcome. I might not buy, so I would say I'm in the sidelines, kind of seeing where this end. In my whole three stocks that I'm gonna show you guys, I'm in the sidelines. I don't know why. I think a lot of interest have been diving into Canada's stock market and it's kind of driving it up. But so I'm just trying to see which of the three kind of pullbacks the most. Maybe I'll invest on them. So we'll see. So next is Canadian Tire, right? Let me just pull them up on the CTC. And they're kind of in the same situation. Their earnings are kind of, Scotia is going to come up around, yeah, like February 21st, if I'm correct. Their earnings are supposed to come out also. So before their earnings, you can see the 1 month chart. They have been continuously going up also. I think they're kind of expecting the same thing as Scotiabank, the earnings to be kind of good, right? So maybe if the earnings were not exceptional or extraordinary, could be okay. Could be a good potential pullback, which could be a good buying point for people. So I will see what happens over there. And my outlook on them, I would say, is like I kind of went through very much detail. I can have a video. I'll put the link down below. I really went in details about why Canadian Tire, because I bought them back in January. I want to kind of increase my position in them. That's my goal. So I kind of went in details as why I bought them. So I won't dive too much in details. If you guys are interested, I'll drop the link. You guys can watch it. So the main reason is they're well diverse. They're trying to push, literally try to go global with the Helly Hansen purchase. So I like the financial and the Helly Hansen, which is, for me, I want to see, I think that can potentially do well. So and also I think this year is going to be, the expectation is pretty high to kind of deliver on those acquisitions. So we'll see where it goes. And I'm pretty much in the same boat as with Scotiabank. I'm kind of in the sidelines because I kind of set my quota as, I want to maximize 150, but they keep on busting it. So I'm like, I'm really in the sidelines waiting until there's a pullback to potentially buy, because the PE ratio started going up. Like now they're 14 and 11. So I'm like I would say in the sidelines. When you see their earnings, like you can see, it's starting to become close to TSX, and they're even there. So I'm like, okay, no, I want to wait. That's pretty much my point, because when I see even their PE ratio, like they usually kind of stay away from the TSX, but now they're kind of approaching it. When they approach, it's usually kind of they drop. So it's a kind of, we'll see how they place. I don't like. I like to buy stuff in sale, pretty much. So if it's not on sale, I kind of try to stay in the sidelines, collect money, and buy when there's an opportunity. If not, I'll invest in other stocks. So we'll see. So for now, I'll wait and see. I think at the end of the month, we'll see how they go. So we go to the next is Brookfield Infrastructure, which is a fund where I've been tracking for a while. But I know the PE ratio is just crazy, and like, yeah, it's the fundamentals don't really go into them, but I really like them because it's a fund. First of all, it's Brookfield, which is really a good management fund that does a lot of investment, and I like them a lot because they're very invested in from data infrastructure to utilities to transport to energy. So they're really diverse, which is very interesting, and they pay a good amount of dividend, and also don't worry about the payout ratio. That's not that's not the well calculation. I think their target is 60%, and they're well able to sustain it. So you guys can dive deep and figure out, but it's there. I do my calculations, and I saw the payments they're making about their so they're okay. So talking about their P ratio is not good, and very high. Sorry, very high. And they recently, that is today, as I'm filming this, and I'll be releasing this video tomorrow most probably. So the earnings came out today, which is February 6th. It's kind of not extraordinary. I would say it's okay. But when you think about the net income, it's pretty interesting. They went up like same as year over year, quarter, but the financial end result, like you see, they got 410 million when it's 125 last year. So, and units per income is 59 cents. Last year they had a loss. So they're starting to ramp up. A lot of income is coming in. And one of the important ratio for a unit is the FFO, which is, if I'm correct, they stand for, I have to Google it 1 second. Let me get that for you guys. FFO. Meaning, if I'm correct, it's called, yeah, funds from operations, which is a formula that they calculate to see how the fund is doing and diverting money out of the whole operations. It's you guys can read about it. It's kind of the way how they can see the performance of a fund. It's a kind of, you can compare the EPS of what called earnings per share of a stock. So that's the important ratio, the FFO for example, a fund like this. So you can see that they kind of went up 8% year over year, and they also went up quarter by quarter. That's very good. The earnings per, like what you call at the end, the earnings per the unit FFO is same thing year over year, but it went up quarter by quarter when you compare. So it's kind of, they're still diverting a lot of income. They're growing a lot. That's the reason I like also their chart, which is not only a dividend paying. They have been really performing well year over year, doing and still paying dividend and growing, and they're also kind of growth and dividends, which is kind of a mix of both. But I'm just waiting for a pullback. So will I buy it? Maybe a month of February, maybe not. But I'm potentially waiting for a pullback, because like leading into the earnings, like you guys can see, it was here and went up. So I'm like, maybe it could go up. Maybe after the earnings kind of dries out, it could go down. We don't know. So we'll see. I'm also laying the sidelines. Maybe I'm waiting for a buying opportunity. So that sums about it. As per the 3 stocks I'm looking into. So let's go to the whiteboard and let's finalize the whole thing. Let's go. Boom. Welcome to the whiteboard. Thanks for joining me. So guys, can you see those 3 stocks? Scotiabank, Canadian Tire, and Brookfield, which is kind of diverse kind of picks I had. So I kind of stand by my opinion when I was kind of explaining, you guys. I'm going to be in the sidelines kind of watching, collecting some money, and also maybe making a purchase, but I'm waiting for buying, like a pullback, because when there's a pullback, I most will buy in. I think because the earnings season kicks in for Canada, people are just kind of like expecting it to be high. Maybe there could be a potential pullback. So if there's a pullback, and I'll buy in. So if not, I was going to sidelines, I'll just buy into other stocks, or just to hold into cash, to kind of wait until a buying opportunity comes up. So that sums about it. Those 3 stocks that I'm watching, among many. So I hope you guys liked it. So if you guys liked it, hit the thumbs up, and also drop a comment. Say maybe what stocks you guys are watching, so we can share and comment. If you guys like kind of the stocks I'm watching into, give me your opinion. I always love to hear from you guys. So it's always I always love it. And also, one more thing, subscribe, and also follow me on Twitter. The link is down below, and I started a Facebook page. Also, just the link will be down below, so you can get subscribed. No, subscribe and follow. So that sounds about it for this video. Thank you very much for watching, guys, and have yourself a wonderful day. Whoosh.